Hello, you're watching Proactive. I'm joined by Adam Forsyth. He's the head of research at Longspur Capital. Adam, very good to speak with you. You're out with a report on Powerhouse Energy, in which you call Powerhouse's technology proven after a year of operation. What's changed in the investment case?
Well, I think the big thing is, and it's important to say this, I think the technology that Powerhouse has fits into a class of technologies that we've seen for processing waste and creating energy in a sustainable way. And generally, the industry refers to these technologies as advanced thermal treatment, ATT, and generally comprised of gasification or pyrolysis, which is essentially heating up the waste, but not actually combusting it, not burning it. And that will release gas. In this case, it releases syngas, which is a mixture of hydrogen and carbon monoxide, which can then be used either just for the hydrogen or can be used to make more advanced fuels and more advanced clean energy fuels or low carbon fuels. And a lot of people have got this wrong. And I think what's really important with Powerhouse now is that they've had this site in Wales, their feedstock testing unit, which is an operating module of their technology. It is now run for a year, and it's run to the design standard. Everything they were expecting has worked. Essentially, it's given the results they were expecting, and I think that's really important. This is actually a change in the industry. Other people have made it work, but I think the fact they've been able to run reliably and run with a multitude of feedstocks, because a lot of the problems are created by variation. If you looked in your own waste bin, you'd see a whole range of different things, and of course these things react differently when they're in the unit, particularly the amount of heat they give, and managing that heat's really important. And I think this shows that the Powerhouse technology has cracked it, and not just cracked it once, has run for that whole year, and I think that's very important.
You highlight Ballymena and Rockingham as key projects. How critical are these in proving commercial viability?
Well, they have to get projects out there. They have to show the world that it's great that they've got this test center and it's been running, and that's really good, and they can bring clients to see that. But having a real project, a real commercial project, is the next key milestone. And the fact they've got two gives them diversity, gives them opportunity. But they've got to do one. Everybody has to move to the next stage to show that there's going to be more. And they're both good projects. I think they're both been making progress. The company itself has been involved in the engineering. I think it's great that Powerhouse now has brought in-house its own engineering business, EngSolve, and that allows it to get good access to the projects. Which should help to de-risk them. But I think it's important to have these, but it's great that they have them. They're out there. We've seen, Ballymena has just moved into planning. They've secured the lease on the site. So it feels tangible.
You suggest Powerhouse can compete with grey hydrogen on a delivered basis. How compelling is that cost advantage?
Well, I think the Powerhouse calls its technology distributed modular generation, and the distributed bit is quite important. Getting out and being able to deploy the technology where there is demand for hydrogen or any of the other downstream fuel products. Because the thing about what we call grey hydrogen, which is fossil fuel derived hydrogen made from steam methane reformation, it's generally made in big sites, essentially at oil refineries. Now, it can be produced for less than $2 a kilo at these sites, but only at these sites. Then you have to move it. And hydrogen can be quite tricky to move. We can certainly move it, but there's a cost involved in that, and there's cost involved in storing it. So by the time you've done that, and we've in our report, we've put figures in from UK government, did quite a bit of reporting and detailed work on the transport of hydrogen, the delivered cost becomes a lot higher. Could be as high as $8 a kilo. And at that point, Powerhouse is getting very competitive. Powerhouse should be able to start delivering once they can run several units and start to see cost reductions in the capital equipment. We could be looking as low as $6.5, even down to $6 a kilo, which is immediately competitive with grey hydrogen. And that's partly because it will benefit from waste if they can get a gate fee on the waste. So essentially, waste producers have to pay for disposing of their waste. If they can take some of that economics into the project, then that cost of hydrogen comes down.
Your valuation ranges from 0.8 pence to 7 pence, depending on execution. What needs to happen to unlock the upside?
So the upside is very much our top case. We always produce a range of valuations, and the to get there, we would see Powerhouse being recognized as the go-to solution, the go-to technology for waste to energy to hydrogen. And to get that high case valuation, we would be seeing it being deployed in multiple geographies, essentially, around the world. We've always said, and I think this is true across the clean energy space, that if you've got a technology that works, it's going to be a global technology. When somebody produced the first lithium-ion battery, they didn't just look at doing it in America or the UK. It was going to be a global product and has become so. And I think that's true across all the clean energy technologies. And in this space, this is a great technology. It's not going to be as big as lithium-ion batteries, otherwise we'd have an even bigger target price, but it could be very big if it became the go-to technology. And again, and this goes back to the very first point, the fact they've run this project and they've run it with different feedstocks shows that it is the technology that can work and can work without the sort of problems we've seen on rival technologies in the past.
You flag project development and feedstock as key risks. What should investors watch most closely over the next 12 months, Adam?
I think the key thing comes back to those two reference projects. So maybe reference is the wrong word, but the two initial projects. Now, I don't think we'll see both this year, but we should see progress on both of them. And I think those are the things to watch for. So, for example, Ballymena is just going into planning. Let's see how that goes. I think there's a lot of support in the local community for the project. It works. It's situated next to Wrightbus, who are a major producer of hydrogen buses in Northern Ireland, potentially a big employer there. But planning is planning. You have to go through a lot of stages. I think the planning authority there is fairly well briefed. It's always good to have planning authorities that can understand the technology that's going there. But we're going to see milestones around that process. And then beyond planning, they'll be moving towards getting funding. They've done a lot of work already on the engineering. And then similarly, in Australia, similar milestones to look for. So those are the absolute keys. I think your feedstock is an issue, but I think that's definitely a secondary consideration. And I think in both locations, the feedstock essentially is already identified. So I think the risks there are less. So I think there's a bigger risk for maybe future projects, but these are risks and essentially challenges to be overcome.
Well, Adam, thank you very much for your insights. It's been very good speaking with you.
Thank you very much.
Adam Forsyth, Head of Research at Longspur Capital.